Alrighty, this is a re-recording on the trade that I took today. I didn't realize that there is no audio, but I got it fixed, so we're chilling. Anyways, on QQQ, or really the entire market, you can tell that we kind of been sitting in a range, right? And if you've noticed, there's a sell-off level here, there's one there, there's one here. There's all these highs right there, right? Well, if you mark all these highs, I'm not necessarily taking a trade based off 530, 124. Like if we get above, oh, you know what, I'm just going to long the market. I do want to see a move break through with the displacement, so I need to see that there's a lot of buyers present. And with the move itself, there has to be a fair value gap. You guys know that I trade these. I love these, right? So whenever you're breaking through previous sell-off levels with a displacement, what does that tell you? There are obviously a bunch of buyers, right? So all you have to do now is market risk to reward and target previous highs. If we would have broken to the downside, we would have targeted lows, but the market didn't do that. So now we just wait for a retracement on smaller time frames. So if I go into the 15-minute, I waited all day basically to get into this trade. And at the very end of the day is when I entered it, because I'm not just waking up every single day and looking to take a million trades on the 3-minute, 5-minute time frames. I'm waiting for these larger levels to be broken so that way I can play really heavy and avoid trading a million trades, a day. And then I enter the market. But a lot of people would ask me, how do you know like it didn't touch the fair value gap all the way? How do you know when to get in? Well, normally I will add on the way down. So once I see lows being broken, for example, this morning I avoided traded this morning because I saw how um, brutal it was. You might have been able to catch a couple scalps here now that I'm looking at it, but just based off previous days and every other day, it's been kind of wacky, right? But when you have larger levels being broken, this is when you know that volume is presenting itself. So there's a lot of volume there. I know for a fact. It's different from playing the 3-minute, 5-minute intraday and then, preparing yourself for these larger moves, which is what I like to trade. I like for the larger levels to be broken, and then I use smaller time frames to take the trade that's themselves. So when I saw low of day being taken out, I was immediately thinking of entering the trade, right? But before then, I'm not just sitting there waiting for it to touch the fair value gap, and then I open up my phone, and then I look for Robinhood, and then just the whole process of me trying to open up my phone, type in QQQ, look for QQQ, look for the contracts. It's like you should already be ready. I was already looking at my phone, ready to buy the 538 calls. If my target's 540 high a day, then I'm gonna grab something in the money. I grabbed 2-day contracts. I gave myself some time for it to play out so I can play heavier. I played with $10,000. I ended up scalping for 30, 35% up at these previous highs here, and then obviously climbed a little higher. I have 3 contracts that closed at 44%. I don't know what the price is at now. QQQ's up $1 overnight, so who knows what it's going to be at. But anyways, this was the trade. All you have to do is wait for levels on larger time frames to be broken, and then you can take the trade. I will not be trading this nonsense here. You will never see me taking losses because I don't trade stupid trades. I only take for sure guaranteed A+ setups. So if you can't do that and you're losing more than you're winning, maybe it's a you thing and not, or maybe it's a patience thing. So who knows, But this was the trade itself. This is how I made $3,500 today. Simple.